All this week, we're getting you ready for the new year by bringing back some familiar market monitors. And tonight's guest has some all-weather stocks that he says will protect your portfolio during a slow, steady economy. Last time he was on as a market monitor was in July of 18. He recommended Anthem, which is up 23% over that time. Apple was up 51%. And Google parent Alphabet is up 14% since he recommended them. Andy Kapyrin's back with us. He's Director of Research at Regent Atlantic. Good to see you again. Welcome back. Vanguard REIT ETF. You're going for slowly and steady there, aren't you?
So, Bill, I'm calling this the Rolling Stones recovery, because just when you think they're finally out, they're not going to tour anymore, they go in and they announce another farewell tour, if you will. In that kind of a recovery, even the Stones are slowing down. They're not hitting as many cities as they used to.
Right.
What that means is growth is going to be there, but it's going to be slower. And what I've identified are 3 investment ideas that I think are going to do well in that kind of slow but steady growth environment.
And you feel real estate does well in the latter stages of a recovery,
exactly.
Right? So that's why you like this one.
Because when the economy is getting more mature, when things are slowing down, you care a lot more about underlying cash flows and the stability of those cash flows. And that's where real estate really matters. It's basically the ultimate subscription model. Your lease, you're locked into it for at least a year. If it's like a commercial lease, you're often locked into it for 10 years. So a lot of predictability, a lot of stability, and it tends to be a sector that does best when the economy is mature and going more slowly.
I guess it's no surprise then if you're going for stability, you like a utility. And you've chosen Exelon in this particular case. Pretty good dividend. Why else do you like it?
So I like Exelon because their geography focuses on the upper Northeast. It's a relatively well-established and stable business model. They're also a relatively low carbon emitter, which is becoming more important as people focus more on environmental, social, and governance principles as they identify investments for their portfolio.
Finally, I'm not sure I would think of AT&T these days when I think stability. Yeah, back in the day, yes. But now they're transforming themselves into this media company with a lot of challenges right now.
So it is precisely because of that transformation that I think they are a good bet for a stable but slow economy. So what have they done over the past few years? They've gone from being a stodgy old telecom with a wireless unit that was big, but that was all that they really had, to a horizontally integrated media company. Yep. So they own HBO and Time Warner. They own the actual pipes that get that to the destination, to the customer. They can really build on this. One, they can consolidate, pay off some of the debt that they used to acquire Time Warner. Number 2, they can go into a subscription model like Netflix. That's already what they're doing with HBO Max and HBO Go. It's a really good opportunity for them to stabilize their business model, be more diversified, and be a good bet for a slow but steady economy.
Very good. Andy Kapyrin with Regent Atlantic. Always good to see you. Thank you. Happy New Year.